Well, welcome from me, John Denton, to another episode in the Business Ready for Sale podcast series. In this episode, we're going to be talking about profit. And as you know, when it comes to putting a value on a business, the profit to the owner is in most cases a key factor in determining the value of the business. Over recent months, a few of my clients have mentioned to me the principles in a book called Profit First by a guy called Mike Michalowicz. The subtitle to his book is Transform Your Business from a Cash-Eating Monster to a Money-Making Machine. So with that kind of title and subtitle, you've just got to take notice, haven't you? I discovered there are Profit First professionals in Australia, and one of them, Amy Bett in Victoria, has got a great track record in applying Profit First principles and teaching other business owners in how to apply them in their business. And so this podcast is a recording of the audio from the webinar that I did recently with Amy. It's quite a long session, but it's full of great detail from Amy, and also we spent quite a bit of time answering questions from people on the webinar. So listen in, buckle up, as they say, and take some good notes. Now, over to the webinar recording. So I was a business broker for 12 years after selling a training business that I'd had for 10 years. And one of the things that you do as a business broker is you look at a lot of financials, and they're not always that good, shall we say. And even now with my coaching and mentoring and working with business owners to help them sell their businesses, the first thing I do is get a copy of their financials. Sorry, Amy, but I have to say this. I find it really difficult sometimes to believe that people think they can sell their business when I see the state of their financials. So anyway, when I found out what Amy did, and I've got a client or two who have been following the Profit First principles, I thought, what a fantastic opportunity to get Amy onto my webinar to educate us and let us know about Profit First. So welcome, Amy.
Thank you so much, John. I'm really excited to be here today to talk about business cash flow and hopefully make it a bit entertaining as well, and not make money sound so boring. Not that it is boring, it's the lifeblood of our business. But yeah, I promise to try and give you this presentation in a way that's digestible and easy to understand. So we might actually go ahead and share my screen, and I'll jump straight into it because I value all of your time. And so as well, if you've got questions as I'm going through, pop them in the chat box. And if I don't answer them as I'm going through, I'll try and answer a few if I think that they're easy and quick to answer. But if not, I'll answer all of your questions at the end of this presentation as well. What I'm going to teach you today is how to get in control of your business cash flow, even if you don't love numbers and even if spreadsheets confuse you. And I'm excited because I'm going to teach you a method that's going to help you to guarantee your profitability. It's going to teach you how to ease financial stress. And that is the worst thing, because financial stress, let's be honest, it sucks. It sucks so much. I have been crippled by financial stress in the past in my previous business. And it takes all the joy out of business. And so if I can even just do that one thing for you today and show you how you can actually trade with your money or work with your money in a way that gives you visibility and clarity and makes you feel in control, then I feel like I've won. I've really won today. And also in a lot of instances, I'm going to teach you how to increase your income, because what I've learned is numbers are really black and white. And when you can actually break down your numbers in a way that's easy to understand and digestible, it's really easy to see what needs to happen to be able to increase that income and also increase that profitability so that you have more money in your pocket. So that's what I can kind of promise you today that I'm going to share with you. And I'm going to start with a scary statistic. I'm not saying this to scare you, but it's a fact that more than 80% of business owners who don't succeed because of a cash flow problem. Did you know about this, John? Did you know about this statistic?
Yes, I've heard horror stories like that. But yeah,
it's true. And so that, to me, when I read that, I was a bit angry, to be honest, because it shows me that there's not enough education out there teaching business owners how to handle their money properly. And it shows me that it's not because we don't have incredible people who are here to do awesome things and they don't have great ideas and great team members and, then everything else that they need to succeed, it's because of money. And that's really frustrating. On the flip side of that is I'm here to tell you that if you've been stressed with your finances and you're feeling like you don't have full clarity over them and that, you have to wait for your accountant or your bookkeeper to tell you how things are going, then it's not actually your fault. And it's not your fault because we haven't actually been given that great literacy in a way that business owners actually handle their money. And so it's really difficult to do something properly if you haven't got the right system and the tools. However, the good part about this is it's actually not that difficult. It's not that hard at all. And if I can do it, trust me, every single person on this call can manage your cash flow properly. And I'm talking to you from experience because I didn't come straight out of high school to study finance and to learn, and then I'm, talking from this pedestal. I'm not at all. I was in the trenches. I failed in my first business. I was one of the 80% of business owners who failed because of a cash flow problem. That happened. I actually used to work for the Cotton On Group, organising charity fund runs around Australia, managing a multi-million-dollar budget, and I was in the prime of my life. Unfortunately, at about that time when I was having my second child, Annie, my husband suffered a brain injury that ended his corporate career. So we went from 2 stable incomes to very quickly having, 18 weeks of maternity leave coming in and a tiny bit of insurance for him, but our income drastically changed. So I actually went straight into business I think I was still pregnant. It might have been like in my 9th month, and I had to go straight into work. And I thought, I can't work full time because my husband can't look after the baby. I'm going to start a business. And I have great contacts. I worked for big organizations, so I knew that I could get my name out there pretty quickly. And I did. I started organising corporate events for Country Road, David Jones, Cotton On, Bowen Health Foundation. From the outside, it looked like I actually got off the ground really quickly and I started to become very successful, which was awesome. Organising incredible events, raising hundreds of thousands of dollars for charities and different things. However, I learned pretty quickly, maybe after the first 9 to 12 months, that this business gig was actually really tough. And even though I'd gone from managing multi-million-dollar budgets, there were so many different things in business that I had not learnt, which was what all the taxes meant. I didn't know how to manage inconsistent revenue coming in because in the events industry, you might get paid, once and then 3 months later paid again. I had to learn how much to pay staff. I had to learn how much to charge for my services. There were so many different things. And all of a sudden, I felt like a little duck treading water. And I was like, oh my God, I can't seem to get this under control. I'd call my accountant and say, hey, how do I manage this cash flow thing? Not in those words. That's probably a bit more polite. They'd say, look, you're doing a really good job. You've already made $60,000 worth of profit. It's just sales minus expenses equals profit. And good job. You're killing it. And I'm like, but hang on a second. Where's that $60,000? They're like, oh, no, you've already spent it. I could not get my head around it. I was like, what is going on here? And let me know in the chat box if anybody can relate to anything that I'm saying so far. Have you had any of the similar things happen where you just felt out of control with your cash flow? And actually, John, this might be a good time to put up that poll because I'd just be interested to hear from people on the call what it is that you find the most challenging when it comes to money and managing money in your business. What have we got? What does it look like?
Not understanding finances is a popular one.
Yep.
Or all of the above is a very popular one as well. So it's pretty much split between the two of those.
Okay. Yeah. And that's very common. And it seems as though a lot of people are probably in a similar boat, even if cash flow is okay at the moment and you feel like, oh no, things are going okay. It's not as desperate as Amy was. If you feel like you don't really understand your finances, it's hard to make good decisions and it's hard to have clarity of how you're moving forward and what opportunities you have available to you. So that's really common. And so I wish I could tell you that my business, I found profit first and my business turned around and it was awesome. I didn't, unfortunately. What happened was I just got burnt out and I was like, I can't do this anymore. I felt really shameful. I'm like, I feel like I can't be a successful business owner because I don't know how to manage money. And I closed the business and I felt really shameful. Yeah, I just was like, I can't, I'm the main provider for our family, so I can't be, it was 3 years. I did it for 3 years and I'm like, I can't have no money for nappies or formula sometimes. Like, this needs to change. So what I did was I went and got a part-time job, closed the business, and I started going on this huge personal development journey. I'm like, I want to be a business owner because it's not all bad. You've got income opportunity. I can make money. Money could come in for me, but I just need to learn how to manage it. And so I went on a big journey, and over that time of studying and learning marketing, I started to dip my toe into coaching people with what I was learning. And then all of a sudden, I came across Profit First. One of my coaches, actually, the book was in her hotel room, and I saw it, and it was like, Profit First, transform your business from a cash-eating monster to a money-making machine. And I decided to quickly download it on Audible that night, and I was listening to it, and I was just, it's like my jaw just hit the floor. I was like, oh my God, like, where was this method? The founder, Mike Michalowicz, he was an entrepreneur who lost all of his money, and then he developed this method. And I was like, this is the most easy to understand thing I've ever read. And so I was like a kid in a candy shop the next day, straight down to the bank, opened up all of my multiple bank accounts, and I'll tell you a bit more about how we can put a cash flow system into our business like this. I'm going to take you through the steps shortly. But as soon as I did it, my whole life changed. For the first time in my business, I felt like I had control. I had clarity over what was going on in my business. And I loved it so much that over time, I found out that there was actually a whole organisation in Australia of Profit First professionals. I didn't know this when I put it into my business, but I had a few questions because this is an American book, and, you know, it doesn't mention GST. It talks about sales tax, but there are a few things that I just didn't get from an Australian perspective. So I reached out to Profit First Australia, and I actually got some coaching myself. And it was through that process, and then at that time kind of telling everyone about it and realising that it's not just me that's struggling with cash flow. Nearly everyone I knew really didn't have a clue, and they felt out of control with their finances. So that's when I decided to become a Profit First professional. And in that time now, I've literally taught well over 200 students. There's about 352 students that have gone through my program now, but also I've personally done well over 100 cash flow analysis. Yes, I always say that word wrong, on businesses. So I've gone in, I've downloaded their profit and loss reports and their balance sheets, and I've done a cash flow analysis on their business, more than 100 of them. So I've seen it all. I've seen what's common in every business. I can literally tell anybody their financial situation in about 20 to 30 minutes. And so through that process, I've learned a lot, and I've learned that things are really fixable. And if you want it and you believe in it and you've got a product or a service that obviously has demand, you can turn your cash flow around really quickly. And so I'm really excited now to take you through this process of what it takes to actually put a cash flow system into your business. So just put a yes in the chat box if you're excited, or if you've got any questions as well, please ask them, because I'm sure that if you're on this call and you want to turn things around, or you want to just have more clarity in general and things are going okay, but you just want to feel better, I know that you can get control of your finances. You can eliminate that stress, and you can run a profitable business. I'm positive of it. I've seen it happen time and time again. So I do want you to make a commitment and take action, because the steps to make this happen aren't hard. As I said, this is actually a really simple method. But, you know, the first bit, opening bank accounts, it's a bit annoying. There's a few things, but if you can actually just make a commitment and do it, I promise you in a year's time, in 6 months' time, it's going to change your business, which is really, really cool. So I'm just coming back to the screen. Cool, we've got yeses in the chat box. That's awesome. Okay, I think you're all with me, which is great. And let's talk about the cash flow method that most accountants don't teach you, and how not knowing about this is not only costing you money, but it's killing your business. John, there's a poll that I'd love you to quickly put up. This is the last poll. And I'm just asking everyone to tell me how many bank accounts you currently have in your business. Awesome. Just select, it should be a multiple choice. Select how many bank accounts you've currently got. And John, you just let me know the answers as they're coming through.
We've got everything from 1 to 4 and to 5 plus now as well.
What's the most common? That's great. The person with the 5 plus.
3 is the most common.
Perfect. That's good. Okay. So some of you already have a few bank accounts, which is great. That's awesome. But it is more common, actually, that most business owners have only 1 or 2 bank accounts. And what that does is it leaves you feeling confused and out of control. And to be honest, most accountants and bookkeepers, and it's catching on now, accountants and bookkeepers are catching on because Profit First is actually getting so big. People are really hearing about it now. And accountants are seeing the people that are using a method like this, even if it's not profit first, something similar, how much more profitable they're handling their cash flow, which is great. But if you think about it, it's actually really simple. If you've got all of your cash flow lumped into one or two bank accounts, it's really difficult to have financial clarity and to see how much money you actually have. And we get this false sense of security that if there's money in the bank, oh, great, we've got money to spend. So we just go and spend it, or we hire new staff, we do whatever it is that we need to do. But in actual fact, in so many situations, we're accidentally spending our tax. We're accidentally spending our owner's pay. I can't tell you how many business owners I work with that don't pay themselves enough, or if at all, or less than their team members. And we're spending the profit in the business without realizing it. And it's like if you think about it, when you're making decisions or you're tapping your card, you're not going to sit and look at your bank account and try and separate all of that tax out. Business is busy. So we're just making decisions on the go, right? So we actually need to separate our cash flow out into the 5 categories that every business owner is responsible for having. And I'll talk about that in a minute. But when you do that, you've actually got a real sense of understanding of how much you've got to spend. And you've also got that protection from spending your money in the wrong way. You've got your tax sitting in a separate account. So you're not going, if you do spend it, you're going to know that you're spending your tax, rather than just kind of praying and hoping that it's all going to be okay. Do you see that a lot, John?
I think a lot of business owners don't look at their financials often enough anyway. In the first place, they don't review their financials. I mean, the financials are your dashboard for your business. It tells you what's going on in your business. And cash flow and doing budgeting is pretty rare in small business, I find. And then, there's no money for tax, or there's no money for superannuation, and then people hit a brick wall. It's just
it's really common. But the best thing about this is that you naturally have to look at your money more, because the way that we do it is you have to transfer your money from your income account into your other bank accounts. And so you have to look at your cash flow, or like weekly or fortnightly, or maybe even monthly. You can do it monthly, but we probably suggest fortnightly, if not weekly. But the second thing about that is you're more protected anyway, because you're transferring your cash flow and you don't have one lump sum there that you can just keep tapping your card or keep transferring out of. You've got that clarity. So you're already kind of protecting yourself. And this is a classic. So a lot of people think that what's going to solve their problem is just making more money. Like when I make $10,000 a month or $20,000 a month or $30,000 a month, that's when their financial situation will be fine. But it's not true. I work with so many business owners at a startup level, but also in the medium stages and multi-million-dollar businesses. Like I've worked with so many multi-million-dollar businesses about to go broke. Or if they don't turn things around quickly, then they're in trouble. It actually doesn't matter how much money you earn. We all have the same problems. And that's because as our income increases, so do our expenses in a lot of situations. We have to hire more staff. We have to have more equipment. We have to have more subscriptions. Like we need more to facilitate the more money that we're bringing in. And, there are definitely situations where that's not the case. Some people are very lucky, and it's also not to make you feel hopeless, because again, it doesn't have to be that way. You can actually do things with more profit, but if you're not having the awareness of what's going on, it is so easy for those expenses to creep up and just keep choking the business. So rather than just making more money, revenue doesn't mean profit. We just need to be able to have our system set up so we can manage our cash flow in the right way.
Yeah, Amy, group members get sick of hearing me say it's not about turnover, it's about leftover.
Yeah, that's I'm going to steal that.
So people will monitor their turnover, but they're not monitoring the profit, and sometimes doing 5 million turnover, but only making 100,000 profit is not necessarily a good business. You're doing a lot of work for not much leftover.
That's right. And look, the thing is as well, I think what makes that difficult and probably why so many business owners roll their eyes and they get frustrated, it's not because they don't want to do better, but it's because they don't know how to. I mean, if they don't know how to read their financial reports, which I had no clue, how to, then it becomes difficult. And it also becomes sometimes a too hard basket because we're all busy. We're busy making the money. So that's why what I'm going to teach you as well soon. And I can't teach you the whole process today, but I can give you some really good hints of how to actually download your financial reports and understand your cash flow position in honestly 20 minutes. And that's the thing. That's what I love about this is you don't have to have a finance background to know your numbers. You just need to know how to download the bloody reports in the right way and just how to scroll over them and understand them. And that's why I'm excited about this. So I'll just quickly say this equation and then we'll move on to what this cash flow system is. But this is a really common accounting equation, which I got told before, and I love this new way of thinking. So sales minus expenses equals profit. That's the traditional way that we're taught to manage money. Sales minus all of your expenses and what is left over is the profit. But when you're leaving the profit at the last, as the last priority, at best you're going to get the scraps. Because as I said, it's like, I think it's called Parkinson's law. Everything keeps expanding to fill the space that we have. So we need to turn the equation and go, okay, sales minus profit. Like, what do we need to pay ourselves? What does profit need to be? And then how much have we got left over to spend on expenses? You can spend $5,000 on a marketing campaign. You can spend $1,000 on a marketing campaign and sometimes still get the same result. Obviously, cost of ads and things like that. I love ads. I love data. So I'm very much a marketer as well. But I do know that you can get a 3 times return on your ads, or you can get a 6 or 7 times return on your ads and it's more profit. So, I'm just saying that we can think a bit differently and understand that we need to put our profit first and understand what that profit is and how much we've got left over to spend. I just thought that's a cool little mindset trick to teach us. Let's get into the nuts and bolts of this cash flow system. So what is a cash flow system? It's really simple. A cash flow system is literally just the process in which you manage the money that comes in and out of your business. And so notice I didn't say any fancy software or any huge spreadsheets. It's actually none of that. We set up a process in our business to manage our cash flow using multiple bank accounts. And each of those bank accounts has a specific purpose. And so let's get into what those bank accounts are. There are 4 steps to putting a cash flow system into your business, just 4. And the first 2 are actually the biggest or the meatiest. So what I mean by that is the first step is to open multiple bank accounts. I'm going to tell you what they are in a second. The second step is determining how much money you need to have in each bank account. So what's your financial position right now? We need to do a cash flow analysis on your business. And we work using averages because when you're using averages, it's really easy to see, like, on average, how much you're earning. A lot of businesses might make 30,000 one month, then 25, then 28, then whatever. And it's really difficult to kind of understand how you're performing. But if you work on averages, you can say, okay, my average income is this, my average expenses is this. We can put a percentage to it. And then it's just easy to have a great understanding of how much money you need in each of those bank accounts. So they're the first 2 steps. Open up the bank accounts, determine your cash flow and how much money you need in each bank account to operate the business, and then take necessary action. If we need to make changes, we're going to make those changes. And then we need to analyze and tweak every quarter to keep our cash flow system relevant to what's happening to our business. But let's start with the bank accounts. Okay, so what bank accounts do you need to have? So the bank accounts that we need are 5. Every single business needs 5 minimum bank accounts. And I don't care what business you have, we all have these 5 areas. So income. So we need a separate income account so that all of the money is coming in through that income account. Money that we're creating for the business, personal money, any other personal money is separate, but just these are business accounts. So an income account, think about it like your holding account, like all the money is pooling up into this income account and it's not going anywhere until you transfer it into the bank account. So think about like the mother hen, like getting fed and fat, and then she's going to feed the chickens, which are your other bank accounts, okay? So no other expenses or transactions that have come out of that account. It's just meant to pull up the money. And then every week or every fortnight, we're going to transfer the money by percentages, which I promise it's easier than it might sound, into those bank accounts. So the other bank account that you need after an income account is profit, owner's pay, operating expenses, and tax. Okay, so I'm going to explain what we use those accounts for, but I do also just want to quickly say that if you have a product-based business or a business that employs a lot of contractors to do work, then another account that you will need as well is a cost of goods account, or what we call a materials and subcontractors account. So we separate that from your operating expenses. If you have products that you sell and it's like you spend more than 20% of your revenue on products or contractors, then you will need to have that extra account. But every business, as I said, needs a minimum of 5. So what is a profit account for? A lot of people get confused between profit and owner's pay. We like to separate our profit from our owner's pay for a few different reasons. One is if you don't have any loans for the business, there's something else. It's loans and savings. If you don't have any loans and you've already got a lot of business savings, then you can give yourself a great owner's bonus at the end of every quarter. And think about this. It's really cool. You get your normal salary, like regular pay that you would pay yourself into your income, into your owner's pay account, But then every quarter, you've got money, profit pooling up in this profit account that you can pay yourself as a bonus. Imagine how motivating it would be if you could take your family on a holiday to Bali every year, or a handbag, or even if it's just a facial at the end of every quarter. Whatever it is that would excite you, that's a really cool bonus that you can have profit in there. But there also are a couple of other purposes for a profit account. If you do have loans in the business, or you don't have many business savings, you can so you're putting a percentage of profit into that account, and then you could use 50% of it to go and pay your loans off more quickly. So you're paying the monthly installment from your operating expenses account, but imagine being able to pay it down even more quickly from your profit account every quarter. It's like blasting away that business debt. And then secondly, you can hold a portion in there for business expenses, and every quarter pop it in another savings account. So you can see here how this profit account can really help you to get the business into a really profitable position, and also award you as the business owner. So I really love that account. It's really motivating to see that growing. Okay, so that's what a profit account is for. Then
that account could be an interest earning account as well.
Exactly right. Yep, it can be for sure. The next one is an owner's pay account. So rather than just transferring the money straight into your personal account, and particularly because we use average percentages, we have an owner's pay account in the business. So you can transfer your, like, say it's 40% of your income, of your revenue goes into that account. Because it averages out, you're going to have money in there for holiday pay, for sick pay, and you'd still kind of set yourself I think it's the best practice to set yourself an amount that you pay yourself each week. But because we're working on percentages, it might be that you see, oh my God, actually, at the end of the year, I can actually give myself a raise. Like I can pay myself holiday pay. I don't have to worry if I'm not working. I've got money in that account. So it's really good to have a separate owner's pay account in the business to take care of you as the owner of the business. The next one is your operating expenses account, and that's pretty self-explanatory. That's where you would pay for your rent, your any utilities that you have to pay for, your subscriptions, your accounting, your legal fees, your staff wages can come out of that account. Everything else that it takes to operate the business, you would pay for out of that account, and you'd need to have a bank card for that one. And then tax. So then we could put our GST in there, our company tax, our income tax. You can also put your super in there as well, just to keep it separate. Some people like to have a separate bank account for GST, but these are the 5 minimum accounts that we need to have. So everybody is responsible for tax, operating expenses, owner's pay, and hopefully to have a profit as well. So you can see how these bank accounts, if you're separating all of your cash flow out, then you really have a good understanding of how your business is performing and how much money you have to spend, and you know that you can pay yourself, which is fantastic. And if you're in a position that you're not able to, then you're like, okay, hang on, I need to make some changes here. And this is where that next step comes in. So I'm just going to come back to the chat just to see.
Yeah, there's a question there from Jenna.
Is an income account where the sales go to? Yes, all of your sales from your business go into the income account, and that's held there for you to then allocate into your other bank accounts either every week or every fortnight or maybe even every month. Profit account, I'll quickly reiterate it again, is for 3 reasons depending on your business circumstances. 1, you get to give yourself a bonus every quarter. 2, to save up some business savings in the business so that if something happens to your business, you've got a pool of money to be able to pay that down rather than having to freak out and not having any money. And then 3 is to pay down any loans quicker. So what I like to do is I like to empty that bank account every quarter and then put some money into savings, either pay off the loan or give myself a bonus. So you're kind of pooling up money in that account every quarter and then every quarter distributing it for those 3 purposes. So hopefully that makes sense. Stephen, I'll quickly answer this. Xero is fine. You just upload your bank feeds into Xero, and then when you're doing your reconciling, you just literally set up a bank rule for each account, or when you're transferring the money in the little description box under where you put the money, you just write what account it's going from and into, and then that shows up in your Xero. So reconciling is an absolute breeze. It doesn't change anything other than the fact that you just have to reconcile those internal transfers. So it might be, 5 extra transfers a week. It's nothing compared to all of the clarity that you have, which is incredible. Like it takes an extra 2 minutes, literally. So that's bank accounts, all right? So we need to open up our multiple bank accounts. I told you the minimum bank accounts. I feel like most businesses end up having 6 bank accounts all up, most accounts, but we like to say when in doubt, open another account. So you might have certain circumstances that work for your business. We know every business needs the 5, but you might like to have a separate account for your employee wages because that makes you feel more confident that you're going to have the money there to pay them. Or you, as I said, a product-based business. If you have a product-based business, you're going to need a separate business for your cost of goods sold or your contractors. Or you just might have inconsistent income. So a drip account might feel good to you where you're putting a percentage away in the higher months, which is going to give you money for those lower months of revenue. So it's smoothing out rather than going on a roller coaster and having like high income and then nothing in the winter months or whenever your business goes through a dry period. You've actually got cash flow there, you're anticipating it, and you can buffer those months. So there are some additional bank accounts that you can have. And if you tailor it to your business and your needs and what you want as a business owner, it's really cool. Promise me you won't get overwhelmed by multiple bank accounts. Once you've got them set up, it's so easy because you just have them named as profit, tax, owner's pay. And then you can see that money building up in them. And it's amazing. Like allocating your cash flow into them takes, less than 10 minutes a week. It's a pretty great process and you feel in control, which is awesome. I told you that we work on average percentages. And so I just want to show you what standard percentages could look like. I get this question all of the time. Now, these percentages were put together by Profit First, and they did a study on over 1,000 businesses, and this is what healthy businesses looked like. This is minus cost of goods and minus GST. Okay, so this is real revenue, which is minus cost of goods and minus GST. So in that case, a business that's earning up to $250,000 could look like this: 5% profit, 50% owner's wages, 15% tax, 30% of operating expenses. That's what it could look like. When you move up, you can see the percentages shift. So 5% profit, 40% owner's wages, 20% taxes, 35% operating expenses. You can see that as the revenue goes up, the operating expenses increase. That's quite natural to happen. But I don't want you to look at this and be like, I'm just going to open up my bank accounts and these are going to be my percentages. Because in most cases, if you've been trading and that's not what your business looks like, if you've actually got 60% of operating expenses and then you're just transferring 30% into a bank account, you're going to learn very quickly that you haven't got enough cash to run your business. So that's why we need to actually do a cash flow analysis on your business and just understand of your revenue, how much are you spending on operating expenses? Like what is the percentage? And then you'd better off to tailor it to your business and then work towards getting into a better financial position.
I mean, Amy, a lot of this really comes down to how well the people have got their chart of accounts and everything set up in the financials to start with. If they've got them set up how I like to see them set up, then they would have a lot of this information available from their past, trading.
It's so easy. So, and even if they're not set up properly, so for example, sometimes I see maybe if they have a product-based business, postage and freight, which is a cost of sale, like at the cost of the good, like that might be in their operating expenses. But all you need to do is like cut it from there and then just paste it up I like to download my profit and loss report into an Excel document or a Google Sheet. When you do that, it's so much easier to move the numbers around to see how things are performing. But you can do a cash flow analysis on your business literally in 20 minutes by downloading your profit and loss report month to month. So you want to see every month. You don't want to see just one lump sum. And then you want to highlight over the bolded categories, which is the total income every month, and look at what was the average, and then the total expenses, and go, okay, what was the average expenses? And then if you're taking drawings out of the business rather than paying yourself a salary, you would look at the drawings in your profit and loss as well. In your balance sheet as well. And then you'd also look and see if there's any loans that you need to add to the operating expenses. Probably getting a bit detailed now, probably too much for this webinar, but I just want to kind of explain to you how quickly it is to actually get this financial information. So Carolyn has a question. Why does owner's wages go down to 0% for a $10 million business? Oh, because you're probably paying yourself a profit distribution, maybe. It's a good question. I have to find that one out. But I'm guessing you're probably paying yourself a profit distribution at that stage. But it's a good question. But you can see as you goes up, though, anyway, you pay yourself a less percentage because you still pay yourself. If you were earning $5 million, you might only still be paying yourself $200,000. So it's the percentages go down and down. And as well, maybe those businesses are setting up to sell as well. Who knows? Have you got any thoughts on that, John?
Well, by the time you get up to that size, the business, if you've got any sense, would be running under management, and you'd be a director maybe, or
taking a profit distribution.
Yeah, and taking directors' dividends and things like that. So the whole picture changes once you get up to that size.
It does. And quickly, David had a question. Cash flow is lumpy, so I'd expect there is frequently not enough cash to transfer into each account. How do you manage this? Yeah, exactly. So that's why we work with averages, because when you work on averages, you're putting enough money in the high times to actually account for some of the lower times. It's always harder at the start if you're starting on a lower month, David, but you're just going to work through it as much as you can for the first few months. And then when you do have those higher months, you have an excess of cash in that operating expenses account. Also, you can, on the high months as well, if there's even more of an overflow, you can put a percentage into your drip account, which is going to help you in those smaller months. If your business is struggling, it's hard, probably the hardest to do this for the first 3 months. But as I said, you don't have to implement the whole thing straight away. Oh, I didn't say this before, but you don't have to implement the whole thing straight away. You can start with just putting your tax aside and putting 1% into profit. You can ease yourself into it, but the best thing that you can do is just get started as soon as you can, because when you look at this situation and you understand your cash flow and you do the cash flow analysis, it's really easy to then see what's going on and make the changes that you need to make. You might do your cash flow analysis and realize, oh God, I'm actually just not charging enough. So I need to put my prices straight up, or I need to focus on marketing and bring more money in, or I've got too many staff, I need to cut some staff, or my operating expenses just aren't sustainable. So the numbers are really black and white, and you're going to learn a lot in this. I haven't met a business owner yet that I've done a cash flow analysis and they haven't seen the direct path to profitability. They can't see the path forward, which is great. So one quick more question, then I'll move on. What would you still recommend a business which only currently bring in 2 to 3 months to put on the same percentages in column 1? Yeah, it depends on your circumstances as well and what you want in your business. So, for example, some people don't need to be making money out of the business to start with, even though I still recommend paying yourself a percentage, because it's good to get into that habit from the very get-go. Maybe it's I want to put money into marketing to start with, so I'm going to put a high percentage into marketing. This is why it's really important to have these standard percentages, but actually tailor it to you and your business within reason. But be cautious, because if you get into a habit of not paying yourself and then you're investing so much into marketing or into everything, then you can get caught out and then find it hard to then pay yourself. So you've just got to think about what is the goal of the business at the time and how can you manipulate the percentages to work for that goal. If it's short term and I go, okay, for 4 months, I'm going to put all that, I don't need to have money coming up because I'm fortunate enough to have a wage or, a partner's wage for something. You might go, okay, let's focus on growth. Let's focus on marketing to get us up to a point, and then I'm going to pay myself. So yeah, as I said, let's tailor these percentages to you. And you do that by doing a cash flow analysis on your business to work out where you're at, and then set a goal every quarter. I'm going to hopefully put more into my profit, reduce those expenses to get to a closer stage to what I'm showing you today with these standard percentages.
Amy, would you have a separate bank account maybe for marketing?
Yeah, a lot of people like to. I definitely, I have a company that I'm launching in the States this month. It's a beverage company. And we have a separate bank account just for marketing because we're putting a lot of money into marketing, paid advertising. So, which we have like a number that we expect to return on that. So yes, a lot of people, especially if you're putting a lot of money into marketing and you're doing high growth, then absolutely you can have a separate marketing account. It gives the people a lot of clarity, which is great. Is anybody pre-revenue on the call? Just put a yes in the chat box if you're pre-revenue.
No.
Awesome. Okay, cool. I was just going to tell you quickly how you can use this method to work for you if you're pre-revenue, but great, we can forget that. Let's just quickly recap. So the 4 steps to profit first. 1, open up the bank accounts. And I've told you the minimum bank accounts that you need and a couple of other bank accounts that you might consider having. Number 2, determine your cash flow analysis. So we've got to download a profit and loss report month to month. We've got to look at our balance sheet and we've got to get those key numbers. How much am I spending on average every month on operating expenses? What am I paying myself on average? What's the percentage? Taxes, you can kind of reverse engineer, find out how much you need to pay in taxes. This is all like 10% of GST always has to come off the top and go into your tax account. But you can work with your account to find out based on your situation, what's that number of tax you should be putting aside. 15% is a very good guide. You might have a certain circumstance that, if you're running at a loss, you might not have to pay that tax for a while. So just work out the dollar figure and reverse engineer it as a percentage. Determine how much money do I need in each bank account for how I need to operate the business. Number 3, take necessary action. So as I said, you might need to raise your prices. You might need to focus on marketing, cut expenses. We need to take that necessary action to get ourselves into a profitable position. And you can do it over time. Rome wasn't built in a day. Just start small. And then once you're going through this process, you're just going to see things that need to happen. It's brilliant. And then number 4 is allocate, analyze, and tweak. So once you know how much money you need into every bank account, you can start allocating. You can start transferring the money from your income account into your other accounts once a week or once a fortnight or once a month. And then I say analyze and tweak. What that means is we don't want to just set and forget our percentages because our business is constantly evolving. So we want to do a cash flow analysis on our business every quarter, adjust our percentages, and then keep going. If nothing changes, nothing changes. But, it might be that you've cut expenses so you can put more into profit, or it depends on your goal at the business at the time and what's happening. But if we do that, if we do a cash flow analysis every quarter, reset our percentages, it means that this method is going to last for your business for the entirety of your business. There are startups using this. There are businesses who have, been going for 3, 4, 5 years. There are multi-million-dollar Fortune 500 companies using this method. So this will literally last you for the lifetime of your business, give you so much clarity and control if you tweak it every quarter to make sure that it's still relevant for how your business is performing at the time. The worst thing that can happen is that you haven't, as I said, you just pluck a percentage out of anywhere, start putting that into your expenses account, and then it's not working and you get frustrated and you give up. You're much better to tailor it to you so that it works for you for the long haul. This is your business and this method can be tailored to you. So this is an important one because secret number 2 is what's keeping you stuck and it's not what you think. So when I first heard about Profit First, it made complete sense to me. And as I said, it changed my life. But as I was going through the process, I had every fear under the sun come up. I'm not going to be able to do it because I've never been able to manage money. Percentages seem so hard. Bookkeeping will be a nightmare. All of these things, bank accounts will be expensive. It was like I was trying to stop myself because I just didn't believe that I could do it, right? And it wasn't until I spoke to a Profit First professional and just laid it all out there. And it was venting, I'm not going to be able to do it. This is so hard. That they were like, Amy, there are literally thousands of businesses. There are over 100,000 businesses have Profit First in their business. Thousands are exactly the same as your business. the only thing holding you back right now is your mindset. It's the belief system that you have in yourself. And I took that to heart and I was like, oh, is that right? And it was true. Every fear that I had was answered. And it was just that my mindset had to catch up with my new way of acting to be able to believe that it was possible for me, because I felt like I was not very smart with money. So I would never be able to do it. And it's so funny. If I had have told myself at the time that I would be teaching profit first and doing, reading people's financial reports, I would have laughed at you. I'd be like, that is not Amy Bett. I could never do that. But it was just that I hadn't been taught the skills to do it. And now I'm telling you that honestly, this is a method that you can implement into your business. It might take you, a couple of months to just get the complete hang of it, because you might have something come up and go, oh, how do I do this? Like, where does my super go? Or where does this expense go? But if you just ask questions, they can be answered very quickly. I don't know any business actually that hasn't been able to implement profit first into their business and be successful. I've never come across one person. And as I said, I've done over 100 cash flow analysis personally myself and taught over 300 people this method. So if you're thinking that it's not possible for you, I promise you that it is. And just lastly, just to bring it home, if you think about when you first drove a car, you got into the car and everything felt very overwhelming. I had my dad next to me screaming at me, this is the clutch, put it in. You've got to think about the road. You've got to think about everything going on. It's a lot. It's overwhelming. But then fast forward 6 months and you get in the car, you've got the music blaring, you're eating McDonald's. Well, that's what I was doing. Driving down the highway, talking to your friends, singing, not even thinking about where you're going, because you've jumped in that car so many times that it becomes an automated process for you. You don't have to think about the doing. You just automatically do it. That is exactly the same as having a cash flow method in your business, because you have to allocate the money. It only takes 10 minutes, but you've got to open up your bank accounts and allocate that money from your income account into your other accounts. You're doing it regularly. You're doing it once a week or every fortnight. And before you know it, you're not even having to think about it. It's just an automated process. And the beauty of that is that no matter what happens in your business, you'll never lose that skill set. You'll always be able to download your reports, look at your numbers in 20 minutes, set your percentages, and then transfer your money into your bank accounts, have complete control over your business. Even if things aren't great, you're going to know where to focus. You're going to have that awareness and you're going to make better decisions, and you're not going to be stressed about cash all the time, because I know business owners, particularly entrepreneurs and people, when we see a problem, we just get on and fix it. So yeah, I feel very blessed today to have the opportunity to share this cash flow method with you. I'm happy to answer any questions and offer support past this masterclass, but hopefully I've been able to give you as much of an insight as possible in this short amount of time with how you can better understand your finances and manage them from here.
Amy, it's all about getting into a routine, is it? And making it a habit to, review your finances. And if you make it, I had a business partner when we had a training business, and we had this routine on a Friday afternoon at 4:00.
Yeah.
The admin person in the morning would prepare the reports we wanted. We would sit down and we would go through them. And because we were doing it every week, we knew what to look for. We could see instantly if anything was going out of whack. We could allocate the money, and it's just getting that habit going. And then it becomes easy. Like you said, You don't even think about it. There is one more question there from Carol.
Yeah, it's also a really good question too, Carolyn. I'm going through it at the moment because, as I mentioned, and we actually help my best friend with a product-based business, and we've been doing it for ages. And she's also in that like startup, really big growth phase. Like she's actually been doubling her revenue every month, which means that she needs more inventory up front. And it is tough. I'm not going to lie to you. It is tough to do it, particularly when you're growing and you've got to get that inventory up front. But there are ways to do it. Firstly, you might need to get investment into the business to help to pay for that inventory. Wayflyer is one that can help you to buy inventory up front. There's also another really great one, depending on how long you've been trading. But Carolyn, TradeBridge is a very good one where you will get money from them to pay for the inventory, and you only have to pay a certain amount back every month, the interest, and then you can pay the principal back over time. But it's not going to kill your cash flow, because sometimes, I don't know if you've used Shopify, but Shopify is great and they give money out like candy, but they take between 14 and 17% of your daily sales. So that actually can be really crippling to cash flow and make it even harder for you. So be wary of the Shopify loans, and trust me, we've got experience with them. I did a cash flow analysis on my best friend's business only last week. We're like, shit, like you've doubled your revenue, but the profit's not there at the moment because, as I said, she's in this high growth stage of having to buy more and more inventory because the demand is there. And we realized the kicker, she would have been fine without the 17% Shopify loan. So there are better ways of investment, like trade bridge to get that inventory up front. Friends, family, investors might come into it. But yes, it's always harder at that beginning, but you still need to think about, have a separate COGS account and then put that investment money that you can into the COGS account. You still need to think about, because if you don't get on top of it quickly, or you're not thinking about the operating of the business, like the operating expenses, it can get into a cycle of it always being hard. So understanding what your monthly operating expenses are from the get-go and how much you need to spend on marketing from the get-go as well, and really just having a plan of how you're going to deal with that is it's going to transform how you do business, and it's going to help you to get in front much more quickly than if you're just trying to swim and go, okay, like I'm just going to try and find as much money as I can. I'm not going to worry about operating expenses now. Like get a plan now.
Plan. That's a novel word.
Yep.
Yeah, thanks for that. Fantastic advice. And COGS, for those who don't know, is cost of goods sold. Your direct costs when you're delivering a product or...
Yeah, Carolyn had one other really good question. I get this all the time about percentage of marketing. Now, look, it's very subjective, but I'm only telling you from experience about what I'm seeing at the moment and what we're currently doing, and I'm just going to be really transparent with you. We're spent every dollar we and you might be interested in this, Carolyn, but we're working for my best friend's business with Jay Wright, the e-commerce equation. He's fantastic, and he teaches ads and he teaches scalability. He's the best in Australia from what I've seen. A very genuine guy that actually teaches proper knowledge. You get so much out of it. Anyway, from what we've seen with my best friend's business and what we're doing is every dollar that is spent, we expect a 3.5 return on marketing spend. So not just from what you can see in your ads account, but what your overall shopping sales are, 3.5. However, like that can improve. Like you can get a 5 times. It can, like you've got to start somewhere. I think if you're not getting a 3.3 to 3.5 return, you're in trouble. And then you've got to keep trying to optimize it from there. So obviously there are other ways to bring in like etc., but it's pretty achievable, I think, if you're thinking about it going, okay, whatever dollar I spend, I need to get $3.50 back. So percentage-wise, like at the moment for our first business, overall income, not Facebook ROAS, overall income. So for us, we're tipping a lot into marketing at the start. So I think it's like of top line revenue, 30% almost to start with. And we're going to try and optimize that as we get going. So hopefully that's helpful. And so that, that's a big expense, like 30% is a lot of money for marketing, but we see the growth there with products. So again, don't take that as gospel. That's not financial advice. That's just giving you an insight about what we've seen working across multiple e-commerce businesses as well. And, there's obviously you can get better and better from there. If your overall return on marketing spend is less than 3 to 3.5, like you got to get better ads, you got to get better marketing because it's not good enough. It's going to cripple your business. Hopefully that's helpful. Yeah,
that's really good. And the key to marketing is measure.
Exactly.
Yep. I see so many people pour money into marketing. They've got no idea what it's returning them, if anything.
We measure ads every single day. I kid you not. We look at the numbers. If we go into it, we have key numbers from our Shopify, and we have a spreadsheet, and we're looking at profit per day, versus not even every week. Because sometimes, like if you're letting ads go for a week and they're not performing, like that can be a lot of money. So you've got to really look and see what's going on. And there are measures, like sometimes you got to set them and give them time, but I can't, if you've got a products-based business, like e-commerce, particularly e-commerce, I can't recommend Jay Wright enough. So David, in respect to Caroline's question, do you mean marketing return should be 3.5 marketing spend? So every dollar we spend on marketing, we expect 3.5 back. So in revenue, that's minimum. That's what we're going after, 3.5. And we know that's achievable with what we've seen. Yes, it's like 28%, I think, roughly. Something around that. Hopefully that makes sense. Yeah. But again, I'd be like, that's a baseline. Like I'm pushing to get 5 times. Like don't settle with that. But it's just like the minimum.
Yeah.
Never settle.
Acceptable level.
Never settle. Yeah. Awesome.
How can people get in touch with you, Amy, if they want to follow up with you?
Yeah, sure. So I'll answer your question in a second, Caroline. So if you want to get in touch with me, I've got a masterclass where I actually basically teach the same content. But on my website, you can see how you can work with me. It's amybett.com, amybett.com. I've got an awesome program that is really affordable. You get all the calculators and everything that you need to be able to do the cash flow analysis. I teach you step by step how to do that cash flow analysis. I give you the calculators to make allocating really simple and seeing your numbers broken down so simple. And I teach you how to set your bank accounts just so you can just get on with it and get going really quickly. Yeah, so amybett.com if you want any further support. I'm so happy to help you. Carolyn, I don't look at my profit in Xero every day. I do that every quarter or more regularly if I need to, but mostly every quarter I'm looking in Xero. No, the numbers that I'm looking at is like we know how much we're spending every day on ads and then on marketing. And then we have a separate spreadsheet that we actually got given from Jay Wright in the e-commerce equation where we're actually putting in like the key numbers, like what was the overall spend. There's 4 key numbers and my husband's the one that manages this every day. But basically there's 4 key numbers that we put into the spreadsheet. We have in that spreadsheet our variable costs and our operating costs. And then it basically tells you what the profit is after GST at the end daily and then monthly. And it tells you what your return on ad spend is daily and then also on average monthly. So hopefully that's helpful. But the sheet takes like 5 minutes to fill out every day. But it's a really good exercise that you can stay on top of your business and optimize it.
So where can people get that, Amy?
So that spreadsheet I can't give you because I would be copying, but Jay Wright from the e-commerce equation, if you're in a product-based business, I highly recommend you look him up. And his program, his first program helps you to get up to $30,000 a month. And that's like it's a one-off payment program. It's really worth the investment. And when you get up to that 30,000, you can go into the next program. But again, they do like 4 calls a week and you've got a really great support system around you. It's highly amazing. So check him out. Even if you just follow him online, he gives you so much great content. Yeah.
Excellent.
Thank you, everyone.
Okay. Thank you, Amy. You've done very well and answered all the questions, I think.
Awesome. It's been an absolute pleasure. So nice to be able to chat to everybody and yeah, thank you for your time and thanks for showing up.
But I've got an offer for anybody on here who, because I help business owners get their businesses ready for sale, one of the things I like for a business owner to do is to, think about how they're going to exit their business very early on in the piece, preferably before they get into the business or buy the business. And hopefully it's not horizontally in a wooden box at the end of the day. So it wants to be on your terms. But start thinking about, is my business saleable and is it valuable? And so there's a little quiz there I think you can see now. If you want to take that, it takes you 2 to 4 minutes. It's free, and it'll give you a personalized report on where your business stands right now. So you can see areas where you need to start working to improve it. And of course, the financials is a big one. Thanks again, Amy. It's been fantastic. Really appreciate your time. It's great to work with a professional.
Fantastic. Thank you so much, everyone. Thank you, John.
What a great session that was from Amy. I think the biggest takeaway for me from this session was the clarity that following the profit first principles gives a business owner on what's happening in their business. It basically forces the business owner to plan, get clarity on what's happening, but it also gives them control over cash flow, managing cash flow and growing profits. And as we all know, when it comes to valuing a business, profit is first. So if you want some follow-up from Amy or to find out the courses that Amy runs and how she can help you, remember to go to amybett.com. That's amybett.com. And if you'd like any help or know more about what I do, you can go to johndenton.com.au. Thank you and look forward to you listening in on another podcast in the future. Bye for now.